Welcome back to Bitcoin for Merchants, an original Coin Academy course. This is the final lesson in the course entitled Accounting, Tax, and Legalities. And we're going to really hit the high points here because there's so much variation from country to country. It's hard for us to cover this in any kind of comprehensive fashion. But really, we do also need to start with a general disclaimer. This is an area of the law and an area of the tax codes that's really in flux at the moment. A lot of countries are just now figuring this out. Others haven't even dealt with it yet. This is certainly going to evolve. It's going to change a lot, possibly dramatically, in the next 12 to 24 months as the EU announces rules and regulations, as Australia comes down finally with firm rules and regulations, and other countries that haven't even dealt with the topic start to come to grips with this new paradigm. I do need to say that we're not offering legal or tax advice, nor do we hold ourselves out as experts in these areas. We're really providing this information as an educational service. We do strongly advise that you speak with your tax planning team and your legal counsel to get professional opinions on how to approach these issues. You need to consider the country of residence, your business status and nature, and your particular personal tax needs as well. Now that we have the disclaimer done, let's move on. Big question. Is Bitcoin legal in your country? This is a chart from Wikipedia. It was current as of late August 2014. The green countries have ruled that Bitcoin is in fact legal to own and to use. The red countries have said it is illegal. The yellow countries we're not sure about. And the gray countries have not offered any sort of guidance at all. The good news is, certainly the vast majority of the world's population centers, except for China and India, have come down firmly on the side that Bitcoin is legal to own and use. Does that mean they've said it's legal tender, that it's currency? No, it doesn't. That's a totally different issue entirely, and we'll get to that in just a moment. But possessing Bitcoin, using it in transactions, if you find someone who will accept it, is not going to get either party involved into trouble in any of these countries. Let's talk about taxation. This varies by taxing entity, so how the UK handles it versus the US versus Indonesia versus Australia. We can't say with certainty at this point in time. Very few taxing entities have issued firm guidance on this. But so far what we've seen is that it's not as complex as many people think it is. In many cases, Bitcoin is treated as foreign exchange, as foreign currency, and it's managed on an accounting and taxation level in terms of gain and loss as foreign currency gain and loss. In other countries, they're categorizing Bitcoin as capital or as property, not as legal tender, in which case it's accounted for in terms of capital gain or capital loss, as the case may be. This makes it essential for you as a company accepting Bitcoin in your business to track exchange rates at the time of acquisition of Bitcoin and at the time that you dispose of or exchange the Bitcoin, because you have to calculate gain loss generally by the value of the Bitcoin at the time it was acquired versus the time that it was disposed of. Really, this is more of an accounting process issue than a complex taxation problem, as the example I just gave points out. If you have good accounting process in place and you track the key data, this is completely manageable when tax time rolls around. Let's look at the taxation issues in the United States, as the IRS has issued some firm guidance in terms of how Bitcoin is to be treated. They've stated that it will be treated as property, not as currency, and this came out in March of 2014. Gains and losses on Bitcoin are only recognized when you cash them in or you exchange them for goods or services. Businesses that accept Bitcoin in payment for their goods or services must report gross income based on the fair market value of the Bitcoin when it was received for those goods or services. So you have to track what was the Bitcoin worth at the time I received it in payment. If you are making purchases with Bitcoin, they're going to incur a taxable gain if the fair market value of the property you purchase exceeds the adjusted basis in the Bitcoin exchanged. Similarly, they will incur a loss if the value of the items that you purchased was less than the adjusted basis of the value of the Bitcoin exchange. So again, it's all about tracking the value at the time that the exchanges occur. Wages are another issue, and wages paid to employees in Bitcoin are taxable to the employee, and the tax rate will be based on the fair market value at the time that they received those wages. Let's take a look at how accounting can be managed to keep this at a reasonable level of difficulty for people. For a merchant actively transacting in Bitcoin, the simplest solution, honestly, is to implement a point-of-sale system that provides conversion data and a record of transactions. Given the cost of these point-of-sale solutions, this is really the best way forward, and by far the cost-benefit on this tremendously favors implementing one of these systems. It simply takes the whole headache out of your hands. You have good records now for valuations, prices, fair market value at the time transactions occur. It's really the way to go, and I can't strongly recommend that enough. If, on the other hand, you insist on using a manual system, if your transaction value, for example, or your frequency is very, very low, you need to set up a spreadsheet, at least two. Capture the following sales data. Capture the date of the sale, what item was sold, the price of that item in national currency, the amount that was paid for that item in Bitcoin, the present value of the Bitcoin at the time this transaction occurred, and then you can calculate your gain or loss. Similarly, if you are making purchases with Bitcoin, you need to set up that spreadsheet and capture a similar set of items. The date, what item was purchased, the price of that item in national currency, the amount you paid for that item in Bitcoin, the value of the Bitcoin at the time you made the purchase, and then from there you can calculate your gain or loss. If you do this, your accountant's going to thank you, and you're going to make tax time a much, much easier exercise. Now, that's all we have to say in this lesson. I realize that probably didn't dive deeply enough for some of you, but there's a good reason for that, which is simply that there's so much variation in the rules and regulations by jurisdiction at this point in time. It's really not possible for us to give comprehensive coverage of this without having a massive course, and frankly, it's changing so quickly we'd be constantly updating the course. So I thank you for your time. Good luck. I hope you found this to be useful.